Afternoon, everybody. Good afternoon. My name is Steve Gregorian. I'm the president and CEO of the Detroit Economic Club. Welcome to today's meeting, and I especially want to welcome our members. If you're not a DEC member yet, please allow me 2 seconds to myth bust. There's no nomination or application process to become a member. There's no job level or salary requirement to become a member. We're simply looking for people that want to build their networks and learn from our thought leaders on our stage like today. So you can sign up when you get back to your office at econclub.org. Or, because it's the holiday season and the season of giving, if you're not a member and want to sign up today, we'll give you a free event ticket January through June 2023, and you can see Megan outside after the program. So as we get started, I would ask you to just kindly silence your cell phone. It's the end of the year. I've done this a lot, so yeah. I don't want to disturb the program, so please silence your cell phone. And if you've been with us before, you know we always get started with a pledge and a prayer. So please stand and join me as we honor our country with the Pledge of Allegiance. The flag is to my right. I pledge allegiance to the flag of the United States of America and to the republic for which stands one nation under God, indivisible, with liberty and justice for all. And kindly remain standing as our invocation today will be delivered by Reverend Dr. Jeffrey Drutchess, St. Paul United Church of Christ.
Thank you. Let's bow our heads in a moment of reverence and prayer. O gracious God, in a time of rapid change amid the sweep of national and global events, remain our guide. Keep us mindful of our abiding moral responsibility to serve your purposes, not merely our own. In our quest for profits and prosperity, never let us forget that the truest measure of any society is the way that we compassionately and equitably attend to the needs of those in the sunrise, sunset, and shadows of our shared life who might otherwise be overlooked or abandoned. Through the ingenuity and innovation which the creative gifts you bestow make possible, help us to build and renew truly dynamic communities across our land, deeply committed to the uplift and well-being of all. Amen.
Thank you, Reverend. Please be seated. If you've been with us before, you know we love having high school and college students with us at every meeting. Today is no exception. These students are here courtesy of our generous corporate sponsors. Their day already began with a private reception with Mr. Van Son. I want to take a moment today and let you know who is with us. We've got students from River Rouge, compliments of Bruce and Yasmin from Citizens, thank you. Students from Cody High School, thanks to an anonymous donor. Students from Advanced Tech Academy, thank you to Ford Motor Company. And 2 groups from East Point. One group sponsored by EY, and the other group, generously enough again, by Bruce and Yasmin from Citizens Bank. So how about a round of applause to welcome our students and thank their sponsors. Thank you. A couple things on your table. It's our seasonal lineup. After today, we're going to give you all a well-deserved holiday break. And to kick off the new year, 1 month from today, it's our annual and popular Michigan Economic Outlook meeting, and this year we'll be joined by MEDC CEO Quentin Messer along with General Motors Chief Economist Elaine Buckberg. That's always a popular event, January 12th. Plenty more coming, so check out our website, watch your email. Also on your table is our sponsor brochure. Please, please, please take a minute, check it out. We can never thank those sponsors enough because they're the reason we can bring you programs like today. And of course, the DEC has an incredible history of speakers that tell the history of our country. Mr. Van Son, December 12th is a popular date in our 88-year history, and you now join a distinguished list of 19 other speakers who graced our stage on this day. A few highlights. Beginning way back in 1936, Sir Alfred Zimmern, who was the founder of the League of Nations, addressed the DEC and delivered a speech titled The European Scene Today, 1938. 1966, General Alfred Grunther. He was NATO's Supreme Allied Commander in Europe, and his speech was titled The Crisis in NATO. And that topic was prompted by French President Charles de Gaulle's decision to withdraw France from NATO military command. There's your history lesson for the day. And then more recently, 2016, Mark Thompson, CEO of the New York Times, Hyper-Partisanship and the Changing Nature of News. And boy, oh boy, here we are 6 years later, and Mark was pretty spot on, wasn't he? So today we're pleased to add Bruce as our 20th speaker on this day in DEC history. It's your third visit to the DEC. Yes, we'll count your Zoom visit in 2020, but congratulations for being number 20, and thanks for being with us. One last thing, we want you to use your smartphone to be involved in today's program. Take plenty of pictures, put it up on social media using hashtag EconClub, and you can also submit questions for our audience question portion for Bruce, and instructions on how to do that are on your table. And those questions will make their way to our presiding officer, who I'm about to put to work. Yasmeen Jassy is the Michigan Market Executive for Citizens. She's a DEC board member, a good friend of the DEC and to me personally, and a solid supporter of so many things in our community. Ladies and gentlemen, please welcome Yasmeen Jassy.
Thank you, Steve, and good afternoon, DEC members and guests. I have the honor of introducing my CEO. Bruce Van Saun is Chairman and CEO of Citizens Financial Group, a large regional bank that serves more than 5 million consumers and business customers. Bruce joined CFG in October 2013 from the Royal Bank of Scotland. He was selected as top CEO of 2022 by Barron's and as the 2019 Banker of the Year by the American Bankers magazine. He has served on a number of boards in both the US and the UK, including Moody's and Federal Reserve Bank of Boston, among others. Bruce graduated summa cum laude with a degree in business administration from Bucknell University and earned an MBA in finance and general management from the University of North Carolina. Bruce will open with some remarks before the fireside chat with Steve. So ladies and gentlemen, please give a warm Detroit Economic Club welcome to Bruce Van Saun.
Thank you, Yasmeen, for that warm introduction, and also Steve for the invitation to speak. I didn't know December 12th was such a key day in the annals of Detroit Economic Club. And it's always great to be here in Detroit and to visit with the club's members and guests once again. Detroit's been a very important market for Citizens for many years, going back to our Charter One days. We have approximately 70 branches that are across the region, as well as a great team of commercial bankers led by Yasmeen. And it's great to see some of our commercial clients here in the room today. We also have a deep and long-time involvement with the community. Strengthening the places where we live, work, and play is central to the Citizens' credo. So I wanted to spend some time today talking about the rapid and sweeping changes that we're seeing across the entire financial services industry and some of the steps that Citizens has taken during this period to harness the power of innovation to the benefit of our customers and all those that we serve. Changing customer demands, new forms of competition, major technological advances, and shifting economic conditions have created what is by far the most dynamic period that I've experienced in my long career as a banker. But while the pressure on traditional business models has been intense, organizations that can create the right combination of leadership, foresight, culture, and innovation can successfully drive dramatic transformation. Of course, right here in Detroit, you've been putting these principles to work with notable results. You need no further than to look at Corktown, where Ford is building a 30-acre mobility innovation district, which is anchored by the iconic Michigan Central Station. And, oh, by the way, we recently opened a branch there. Next off is downtown, where the World Economic Forum has cited the global headquarters for the Center for Urban Transformation. And then also the district, Detroit, where the University of Michigan is building its Detroit Center for Innovation. So these are just a few examples of this city, the residents, and the business community moving decisively to create opportunities for sustainable success going forward in the wake of great change. Citizens itself is no stranger to change and transformation fueled by smart innovation. The Citizens that separated from the Royal Bank of Scotland in 2013 was undermanaged and suffered considerably from a lack of investment. Virtually every aspect of our operations and culture needed attention. With a vision of being a top-performing bank that delivers well for all our stakeholders, we moved quickly to establish a strategy that was focused on 3 pillars: delivering exceptionally well for customers, operating with strong financial and business discipline, and achieving excellence across all we do. We understood that digital capabilities would be critical to future growth and serving customers well, so we made some smart early bets in digital, in data and analytics that have enabled us to better understand and react to customer needs. We also understood that leadership and culture are the essential drivers of long-term success. In fact, we like to say that leadership is the Uber lever for delivering transformation, growth, and lasting cultural change. We focused intensely on developing and attracting strong leaders, and I'd say that today we have as strong a leadership team as anyone in banking. We also leaned heavily into building a culture of innovation that has enabled us to think and act more like a digital native company, enabling us to roll out offerings that have set us apart in areas where we felt we had the right to win. So rather than any one thing, it was this combination of leadership, culture, and innovation that's tied to an intense focus on customer needs that has driven our transformation. With this essential platform in place, we've continued to leverage innovation to the benefit of our customers. As I mentioned, customer and client expectations have changed enormously, especially during the pandemic. Our customers have many priorities and goals they want to achieve, and our goal is to be their trusted financial partner in achieving them. This requires having the right skills in our customer-facing colleagues, along with the right technology, products, services, and approach. Putting the power of innovation to work has been key to our progress in gaining that position. Let me give you a few examples. We're continuing to look at how to balance physical and digital channels, empowering customers to own their own finances with real-time digital transactions on their devices, but offering advice when they need us for important life events. This includes making significant investments in our mobile platforms and moving to a modern, cloud-based core, adding more and more digital capabilities to allow customers to complete transactions with ease and just one click, ensuring that our customers have a consistent experience in any channel that they choose. We're also very focused on making things simple, intuitive, and personalized. Through data and analytics, we can anticipate our customers' needs and provide a truly customized experience. Giving customers early access to cash helps avoid the stress of overdrafts and provides a head start on paying bills. This was the driver for our Paid Early service, which automatically gives customers access to payroll up to 2 days early, something especially important to millennials and Gen X and Z. Another example is our new Fastline home equity line of credit. We've delivered a very slick, fast, and innovative digital experience for our customers that are looking to tap into the equity of their home. Average application to approval cycle time is now down to 9 days from over 35 days. We've digitized and monitored how we deliver advice via Citizens Insights. Within the mobile app, as we learn more about habits and needs, we provide real-time and personalized insights to improve customers' financial health. Citizens was an early entrant into the point-of-sale finance space. Citizens Pay is the leading bank-owned BNPL provider, offering bespoke point-of-sale financing tools to merchants across various retail sectors, including consumer electronics, travel, and healthcare. Top customers of Citizens Pay include Microsoft, Best Buy, and BJ's Wholesale. All this is resonating with our customers. We are rapidly improving as our service scores tell us, especially with customers 40 years old and younger. Another area I'd like to call out specifically are ways we've leveraged innovation to help customers navigate towards a more environmentally sustainable future. This includes green deposits, which provides commercial clients with a deposit option that supports their organization's sustainability needs. The carbon offset deposit account is another one that provides clients a simple way to begin managing their emissions and to integrate sustainability practices into their strategies and products. With this account, clients can measure emissions for activities such as energy usage or travel and use credits that are earned on deposits to purchase carbon offsets. The ideas and designs of these products come out of our Innovation Forum and Fund, where early-stage colleague ideas are vetted and provided seed money to explore. Many of the best ideas come from within and from unexpected places. When you give people the chance to ideate and to explore, building on ideas, you can come up with some very exciting solutions. Along those lines, earlier this year, we had a hackathon, which is an agile-style internal event where colleagues come together to brainstorm on a challenge and work together to generate ideas and a prototype. One of the two themes for the hackathon focused on sustainability-linked offerings for customers. More than 50 new ideas were generated and are being explored. Tapping into the ideas and passion of our colleagues in this space is a huge opportunity for us to deliver new solutions to the market. Competing successfully in this environment requires forward-focused leadership, the right strategic choices, and decisive transformation in order to serve customers well and ensure long-term success. And while innovation is foundational to all of these things, it goes far beyond cutting-edge technology. At Citizens, innovation embodies the very ethos of our organization. It is a fusion of our people, our capabilities, our culture, and intention that enables us to empower those we serve to reach their potential. This mindset permeates the organization, powers a deep commitment to improve lives through transformative ideas that anticipate and exceed the needs of customers, wherever they are on their life journey. So we look forward to further advancing this approach and commitment here in Detroit and for all those that we serve. So again, I'd like to thank you for the opportunity to address you this afternoon. I look forward now to sitting down with Steve to chat and answer some of your questions. Thank you.
Thank you, Bruce. Good to see you.
Good to see you, Steve.
Welcome back to Detroit.
It's always great to be here.
Thank you. And on behalf of everybody in the region, thank you so much for citizen support of our city, our state, our region, and the Detroit Economic Club as well.
Yeah.
So thank you for doing that. So let's start here. Last time we talked at a DEC event was 2020
Yep,
via Zoom.
couldn't be in person.
We
Nope.
couldn't be in person. We did it via Zoom. So we're coming out of the pandemic, right? We've got some economic uncertainty. We've got high inflation, a lot of things going on. What are you seeing out there nationally, and what are you seeing here in Detroit and Michigan?
Yeah, so it's interesting. It's been a very unique year. It kind of hasn't finished the way we thought it was going to finish. So it became pretty apparent as the year went on that the Fed was behind the curve on inflation. Inflation was not going to be transitory, and that the Fed had work to do. So they've aggressively raised interest rates with a goal ultimately of slowing growth and cooling off the labor market. And so that's created lots of challenges for banks and for other companies. But having said that, the medicine is kind of impacting the patient very gradually. So if you think about, like, right now here in the fourth quarter, you go around and try to get a dinner reservation, everything's packed, and try to get on a plane and every seat's taken, and go to the malls and people are out shopping. So I think there's still a fair amount of pent-up, we'll call it revenge spending taking place. Probably my wife is leading the parade on that, but in any case, it's almost like we're going to enjoy ourselves and have a great holiday season, and then we'll worry about what comes next in 2023. So I do think that there will be a slowdown. The medicine will affect the patient, and whether that pushes us into a recession or not is unclear. Having said that, I still think the consumers that we serve are in still good position. They have good liquidity, forced savings during the pandemic, government transfer payments, you name it. They're not borrowing a lot of money. They're not getting in trouble. They still have good cash balances. And companies who made it through the pandemic, they've refashioned their business models, leaned their expenses, went digital, locked in lower cost financing. So they're actually having pretty good years. So I'm not that worried that what comes next in 23 is going to be a bad one as recessions go. I still kind of think it'll be reasonably short and shallow, but you have to prepare. You have to start playing a little more defense and ratchet back a little bit on offense just to be prepared for a potential storm coming. Here in Michigan, I think it's been fantastic the way there's a lot of transformation in the dynamic of different sectors that are playing out here in Michigan. So unemployment is, I think, at a 20-year low. You have good business formations, kind of leading the charts, I think, in terms of small business revenue growth and business ownership. You've seen, I think, the diversification into life sciences and lots of entrepreneurship. Business startups are up. A lot of folks working as contractors. So I think that diversity lends a new amount of resilience to the Michigan economy and a solid foundation as we go into this period.
You were watching your Giants lose yesterday, but if you were here...
I watched them lose to the Lions a few weeks ago, too,
we like
Steve.
that, too, yeah. One of the headlines in yesterday's Detroit Free Press was, across Michigan, companies continue to hire.
Yeah.
So,
Yeah.
no surprise there,
Yeah.
yeah. Good. I want to talk about a lot of the things you talked about in your remarks. Lots of innovation and things you're doing, but what are some of the things in your remarks and what you just talked about mean for the financial services sector, and what are the challenges and opportunities out there?
Yeah. So I'd say, I mentioned defense and offense. So
Yeah.
I think you get into this kind of a period, and the Fed put a lot of liquidity into the system to combat the impacts of the pandemic. It's now withdrawing it. So, your funding structure, deposits are king. We used to have people like Yasmin and her people, loans, grow the bank, bring in new business. Now it's make sure we're getting the deposits. So a little bit of shift there. So you want to make sure you have really good capital levels and you're liquidity and funding is in a strong position, and you're kind of probably being a little tighter on credit at the margins if we are going to go into a downturn. So defense is first. The second thing, though, is that you go through any storm, the clouds come in, the clouds roll out, the sun comes out again. Winning teams, like the Lions and Giants still have a winning record, they don't just play one side of the ball, they play offense too. So that's where the innovation and these initiatives that we're focused on, we're keeping our pedal to the ground. So we're not really throttling back. We're trying to do both in lockstep. Prudent offense, drive initiatives that are going to bring new customers to the bank, new services, growth when the clouds go away, and then but make sure you're prepared when the clouds are here with strong defense.
Good. I know it's important to you and every business, but you guys do it really well, listening to your clients. So you've got many large employers as clients, and as you do here in Detroit and Michigan. What are you hearing from them? What's on their mind?
Yeah, I'd say most are doing well, as I said. So a lot of businesses are having record years, particularly as you go up the market cap. The bigger companies are doing particularly well. Smaller businesses, it's a little more mixed, but bigger companies doing extremely well. But they're kind of grumpy and frustrated because while they're having a record year, they're pushed on inflation. They're challenged by supply chain issues. They're challenged not getting enough people into their businesses to make their strategies go. And so I think as the year's gone on, the inflation, most businesses have been able to pass through the inflation on their input costs and get price increases. So margins have held up pretty well. The supply chain issues are easing, I think, gradually, which is very positive. But the people thing is still acute. And so I think increasingly companies have to work on investing in new sources to source talent, whether it's grow your own from universities, or we've seen a lot of workforce development reaching into LMI communities to bring people back into the labor force, which is really great. It's really great to see. So I think that's probably the number one thing still is the war for talent and finding people who can help businesses face the future with the skills that they need.
Yeah, it's no different around the country too. Every state, if you punch up their websites, same thing, the war for talent is there.
Yeah.
Any differences between some of the mid-cap and large businesses versus small businesses? Are you hearing some things from small business that might be different?
Yeah, I'd say the bigger businesses typically are more diversified, and so they tend to be a little more resilient. And some of the smaller businesses didn't fully complete some of the investing process, and now they're worried about the outlook. So I'd say there's some that are really doing well, and we're able to refashion their models and move more digital and listen to customer preferences. And there's others who didn't get all the way through that that are struggling a little bit.
Yeah. A big thing on everybody's mind is culture. We've talked a teeny bit about hybrid work and what that's doing for culture, but for some it's wreaked havoc. For others, at minimum, it's just put pressure on their company culture. And I know culture is a huge thing for you personally and for citizens. So what makes your culture special, and how has it changed these last few years?
Yeah, so I'd say the number one thing in our culture is we are very focused on delivering for customers. Everybody you meet, even people who aren't customer facing, know that we're in business to deliver good outcomes for customers. So if it's on the consumer side of the house, it's we want to be a trusted advisor to someone on their life's journey and make them have more successful financial outcomes. Same thing on the business side. How do we help companies achieve their growth objectives and their business agenda and handle kind of the cyclical nature of the economy? So that really infuses our culture, and it attracts the people who really want to deliver good outcomes for customers. And the second thing that goes with that is we're very collaborative and very team-oriented. So people pitch in to show up with good ideas to help those customers succeed, and they don't have their hand up trying to get the credit and get the bonus at the end of the year. It's like, okay, we all are going to do this together. We'll tap into the best that we can deliver for the customer, and then trust that the people up the chain of command will make sure that the pay reflects that teamwork and those good positive outcomes. So those are two of the things that I'd say really are hallmarks of our culture. The pandemic, obviously shifting people to more remote work initially and now hybrid work, can challenge that to a degree, because it's a little harder to collaborate. It's harder to mentor young people in the approach of how we want to do things. So it forces us to lead differently. So it's incumbent on us to talk to the leaders and say, you're going to have some people in, you're going to have some people that are Zooming in. How do you make sure that everybody still feels included and that we're collaborating effectively? So my hope is that ultimately more of it comes back to where it was pre-pandemic. I do think we're going to have more hybrid and more flexibility. It's a good thing for colleagues. They really like that, but you've got to find the right balance.
I don't know if this is happening at Citizens, but still, here we are 3 years from the pandemic, right? 2 years, 3 years, 2 years. I've lost track of time warp. March 2020, so
Yeah.
2.5 years. Still, people that haven't been in to meet their bosses or peers. Is any of that going on?
Well, yeah,
at
you've
Citizens?
hired people
Yeah.
who you hired remotely,
Yeah.
and they were hired with the full authority to work from a remote setting. We internalized a lot of our applications development work. We had used partners, and we said, let's go hire 400 or 500 software engineers and do it our way, and work in agile pods and have them work more closely with people in the business. Those engineers aren't just in our traditional footprint. They could come around from everywhere, and they don't necessarily want to come into the office because they were hired on that basis, and there's other people who will let them work that way. So, we have to now figure out, how do we make that work? How do we kind of capture that talent and still make them feel like they're part of Citizens, and they enjoy our culture, and there's a reason they want to be here.
That's a big challenge, isn't it? Yes.
Yep.
Let's talk about innovation, because that also goes as part of culture as well. You're introducing lots of innovative products. You talked about that, and services. What's the secret sauce in your success as an innovative?
Yeah, I tried to bring that out in my
Yeah.
remarks.
Yeah.
It's really not just one thing. So it's not an emphasis. We have a lot of building blocks to be innovative. So we have an innovation forum. We have an innovation fund to fund ideas. But I think it starts at the top with that mindset of let's use people's good ideas, and let's use new technologies to deliver better for customers. And so we task everybody in the company that this is part of your job. And so I think it's that putting it into the culture, having the leadership emphasize it, and it becomes a way of life that actually makes it successful.
I heard you say a few times about the under 40 crowd.
Yeah.
You're spending a lot of time on innovating products and services for them. Why is that important?
Well, it's interesting because if you looked at our scores around the time of the IPO in the mid-teens, we were scoring very well with older customers, but not so well with younger customers. And there's two things in life that are assured, Steve: death and taxes. And so, your older customer base isn't going to be on the planet forever. So you have to constantly look for ways to rejuvenate the customer base. So we've made a concerted effort with products like student lending and student loan refinancing, targeting a mass value proposition, or mass affluent value proposition for younger people as they go through kind of the early part of their lives. What can we do for them specifically? How do we get them the first house? How do we get them a home equity line of credit when they need to save up for something? So, that's been a real focal point of ours. And those customers are digital savvy. And so they buy things online. They have good experiences with the other vendors that they use, and they expect their banks to be just as good, that our website has to be good, the point and clicking off the different products they want to explore has to be really, really good. And so I think from the mid-teens to today, We've both grown the under 40 customer segment by having an emphasis on that, and we've worked to improve our standing with them, which goes kind of part and parcel to it. So now our Net Promoter Score, for the first time, just passed the younger people, just passed the older people. And it's not like the older people, the lines crossed somewhere. Older people stayed up, but the young people have been so impressed by the investments that we've made that they've caught up to the older folks.
That's great. Congratulations. And I know when we met with students earlier, you did a terrific job of the basics of banking, credit. How important is that we educate even high schoolers?
I think, so we're big in the community. It's a big part of being a bank. We volunteer 200,000 hours. We have over 1,000 people serving on nonprofit boards. And we try to group our kind of areas of focus into just several. Like one is basic, providing basic needs, hunger, shelter, things like that. Another one is financial literacy. And this is right what we're talking about here is, how do we make sure that young people really understand how to save money and how to budget for things that they want and not just overspend and get themselves in a financial trap. So who better than a banker to volunteer with various community organizations to try to impart that wisdom. And I'm also happy, we talked earlier, that many schools are now putting that into the curriculum. That not only do you need to learn the 3 R's, but you should learn about money and how to manage money and set a budget and things like that. The last thing of the 3 umbrella areas was promoting economic opportunity, and it's things like workforce development and other programs that would fill out the slate for us.
Good. Last question for me before we bring Yasmin, throw it to Yasmin for audience questions. Leadership, and you mentioned the word Uber level. I've heard you say strong leadership is the Uber
That's
level.
That's not Uber the car. That's like that's a German word.
I got it.
Okay,
the
so
Uber level
Uber
in building
level.
a great company. Talk about your leadership philosophy personally and at the bank.
Yeah, so I think what I look for in leaders are, first you have to have the right experience and track record that demonstrates success. But really great leaders inspire followerships. They can paint a picture and say, this is where we have to take the business and gain alignment with the organization that, yes, let's sign up for that. That makes a lot of sense. And then make sure people understand what their role is in that overall vision. And then go out and drive execution. So really good folks, they have a growth mindset. They're able to inspire people. They're able to attract good talent. They can toggle to a high level and talk about things here, but then they get right down in the details and make sure that things are being executed well. But you find people like that, and it makes a tremendous difference in how fast you can transform a company.
Terrific. Well, you've got a good leader here in Michigan with Yasmin, so let's bring her back up. While she's coming up, let's thank Bruce for his remarks.
Thank you.
Thank you. Yes, thank you. So we've got a lot of great audience questions, so let's just jump right in. I'm going to go with one that just came in. Given all the tumult in crypto recently, do you think the federal government should jump in and start regulating?
That's a fastball, right? Walk right into the batter's box. But look, I think the U.S. regulators and politicians have been very circumspect about crypto as an asset class and whether it should really be embraced and play a role in people's investments, in their personal investments. And I think because they felt they needed more information, they would go slow. They would kind of keep it under wraps in the U.S. It ended up migrating offshore. And so you see a big business like FTX started in Hong Kong, then they went to the Bahamas, and they were kind of almost venue shopping to get light touch regulation. And then, terrible basic things that shouldn't happen in a business of not segregating customer cash and then and investing it into related parties that could punt it in the markets. You would never see that in a properly supervised U.S. financial institution. So hence, I think it's a really good, thoughtful question is, would those folks have been better off had it been done onshore under a much more stringent regulatory framework? I think the jury's still out, but I think there's increasing pressure that it's here to stay. There's a lot of people that are involved in crypto as an asset class. I think, therefore, it's probably likely to dust itself off and come back. And what doesn't kill you makes you stronger. It may be on the next wave of this may be stronger, but it probably, I think there's enough hue and cry from the general population that Washington has to get involved here and has to kind of lay the ground rules out so it can be brought into the safe, regulated financial institution. It'll take some time because there's still a pretty wide divergence of opinion on it, but I'd say give it 2 years and you'll see a framework develop here in the U.S.
You hit that fastball. Way to go. Good job.
Okay, I'm going to read this one the way it's written. There has been much debate about defining recession. How would you define it? I had air quotes, just in case you didn't see it.
The technical definition of recession is 2 quarters of negative growth. We actually slightly had that statistically in the first half of the year, but the labor market was still so strong that people said, let's look at that and kind of give it the benefit of the doubt and say it wasn't a recession, which I agree with that. So I think you follow the contour of the definition. You've got to have contraction 2 quarters in a row, but it has to be more than just a teeny blip, and you have to start to see unemployment, I think, rise. So I'd say the betting line with Wall Street economists is that we will have probably 60% or so think that we will have a technical recession in 23, but it's probably moderate, maybe 0.5% to 1% GDP contraction, with unemployment going up from 3.5 to 4.5. And if you asked me, would most people in Wall Street be happy to sign up for that? That's the so-called soft landing, which I think it would be an okay outcome if it brings inflation down and gets it back, sub 3%, I think, by the end of the year. That'll be a nice accomplishment. I mean, the unemployment rise is bad for the people who lose their job, but and so we'll have to see how to deal with that aspect of it. But inflation is insidious and it affects everybody. So bringing that down and under control and not having it get entrenched is super important.
Quick question. So 3.5% to 4.5%.
Yeah.
Where those workers come from? I don't think it's going to be the services sector. Do you have any thoughts on where that might be?
I think it would be spread. I think there'll be some in services. I think the tech companies overhired and they're laying off, and you can start to see that. So I think there's kind of shedding workers in some areas that overexpanded, and then I think a spread across other durable goods and areas that'll be affected. I mean, you can see right now that the areas most impacted by high rates, like housing, is certainly slowed down fairly dramatically. So it'll, I think, spread around. But hopefully there's no severe impacts on any particular industries or regions, which is why in my comments earlier pointing out that Michigan is kind of diversified more. I think that should put you in good standing and should be pretty resilient compared to other states.
Right.
The longer inflation goes on, the likelier it is to become entrenched. True or false, and why?
Yeah, that's kind of was the point I was making, that it's true. And that's what you really are trying to guard against, because if inflation is going up, then companies negotiating their annual merit increases people say, you can't give me a 3% raise when I'm seeing that the headline inflation is 6%. I'm losing ground. And so if everything else continues to go up, it's hard to start to bring compensate. We have a strong service economy in the U.S., and the major cost for service companies is cost of labor. And if you can't start bringing that down and bend that down, you're going to get on a vicious cycle where, so you give people that 5% raise, and then companies feel they have to raise their pricing to compensate for that. And then it just keeps going and spinning faster. So trying to stop that and nip that in the bud, that's why I think you're seeing the Fed be so aggressive right now.
So this is a compare and contrast question. How well prepared are banks now compared to what happened in 2009?
I think it's night and day difference. So, we went through a period where in the great financial recession, banks can rightly be seen as part of the problem. So they did not have strong capital, liquidity, and funding in place. They didn't have really strong risk management practices. They weren't doing stress tests and anticipating where the next risks that they'd have to contend with would come from. And so no surprise when an extreme event happened, they needed government assistance and really struggled to get strong again. It took years for banks to get strong again. If you then look at the reforms that happened in the wake of that, there were major prudential reforms around capital, liquidity, funding, stress testing, risk management, board responsibilities. All that kind of got taken up to the next level. And then the second wave of the banking reforms was around code of conduct and customer behavior and making sure that you're treating customers well and you're not hitting them with all these little annoying fees. And so the whole mindset, I'm in business to because I have customers and I have to treat my customers well, that was the next thing that changed. And so you come into, when we were in the pandemic, people say, well, that wasn't really a true test because the government and the Federal Reserve Bank came to the rescue, and so banks kind of had an easy ride going through it. Well, it didn't look so easy when the whole economy was shut down for a period, but I think most people would say the banks came through that period in very strong condition, and they were part of the solution, not part of the problem. They were able to still lend money when companies were all drawing down on their credit lines. The banks had the money to give them because we had strong balance sheets. When the government needed to find a way to get PPP loans out to help companies, who did they turn to? The banks had the technology chops to figure out how to do that. I feel really good that kind of whatever comes in front of us, the bank is in a much different and much improved position from what it was back in 2008.
So kind of piggybacking on that question, another question that came in is, are there too many banks in the U.S. and would more mergers make sense?
Yeah, I would say if you look back over 25 years, the number of banks seems to have like every 5 or 10 years. So we had 25,000 depository institutions that went to 12, and now it's down to like 5. And so I think that scale matters, particularly when the digital transformation, migration to the cloud, the technology demands on smaller banks is pretty intense. Having said that, there's still many banks who serve unique communities very well and with local touch, and so there's room for small banks, but I think that's where the consolidation still will take place. And so it wouldn't surprise me in 5 years if we have 3,000 banks instead of 5,000. I don't think the folks in Washington these days want to see the big banks get a whole lot bigger, but I think if they understand the imperative that they want to see a strong banking system, and if we have some consolidation at the smaller end and that creates survivors, then that's a good thing.
I think we have time for one more here. How have you seen the role of banks in society evolve during your time?
So that's a great question. So, I'd say for when I first took on the Citizens role, banks there was only one industry that was rated below Congress, and that was banks. So you have to work pretty hard to come out below Congress in the polls. But in any case, you know, there was a big trust deficit, and I think a lot of that was, you know, they were part of the problem, and the government had to come and assist a number of institutions, and they still had that mindset of not working for their customers, but working against their customers. So I think, you know, we all knew the good things that we did as banks, that we really focused on the community, and you go to any event and who's there in the community. Banks have the army of people there wearing their, in our case, our green shirts. And that story was kind of getting bottled up and lost in kind of some of the problems that the industry went through. So we spent a lot of time getting better and doing even more in the communities and trying to get the story out. So I think we've certainly passed Congress. We're probably not we're not as high up the ladder as I'd like to be, but we're making good strides and moving upwards and to the right, which is the direction you always want to go in life.
Are you better than Xfinity customer service? Please say yes.
I'm not sure, but I would take the over on that and bet you $5 that we are. So.
All right, well, we're going to jump right into what we call the lightning round. And I'm just going to basically rattle off a bunch of questions that
Okay.
you can give quick answers to. So, something on your bucket list.
More travel. I'd like to go to Scandinavia, Israel, and Aussie, New Zealand.
Awesome. A person other than your family member you'd like to have lunch with.
Warren Buffett.
Great. One of your favorite songs.
Adventure of a Lifetime, Coldplay.
Good one. Last book you read.
How the World Really Works, Vaclav Smil.
Favorite team growing up.
New York Yankees.
One of your favorite movies.
Wizard of Oz.
Oh, yes. Describe Detroit in one word.
One word, resilient.
Very nice. Okay, we're going to... We'll end with this last one. Advice to your 25-year-old self.
Always give your best. Give it 110%, whatever you do.
Good answer. All right, Steve, I'm kicking it back to you.
Thank you, Yasmin. Bruce, thank you so much. You're always welcome back here anytime. I hope we can do this again.
Great to be here,
Thanks
Steve.
again for all of your support. By the way, your support of holiday nights at Greenfield Village Citizens, thank you, Brittany, was amazing. It was a fantastic experience. So thank you for that. But thanks for all you do. About a round of applause for Bruce Van Saun. Thank you.
Thank you.
Yasmin, outstanding job as our presenter.